Well, hello, and welcome. Good to have everyone back in the Black Tie Lounge. We've missed you in the last fortnight. Fortnight goes very quick these days, I tell you. And we are honoured tonight to have the lovely Bob, CEO of Koomooloo Co-Living Fund, here with us tonight. So thanks, Bob, for joining us.
It's certainly a pleasure, Caroline. Thank you.
Thank you. And thanks for stepping in. Also, obviously, Catherine couldn't make it, so we were very lucky Bob was available. So, yeah, thanks for that. And for those who came to see Catherine, we will definitely catch up with her at another session. As always, tonight we're going to ask Bob quite a few questions, I think, in regards to the amazing co-living fund concept by Koomooloo. And we will hold questions for the end, but we'll definitely have time for a Q&A session. So feel free to keep those questions noted and we'll let you know when to pop them in the chat. Bob, again, thanks for joining us. Can you just tell everyone who's listening a little bit about yourself and the team at Koomooloo?
Oh, certainly, Caroline, yes. Property's been my passion for more than 43 years. I've been in the industry for 43 years, but as a boy, my local area at Lane Cove got built out by the Holland Group, and as a feral kid I would get the used soda bottles and trade them in, a little gang of us, and we'd have club meets and have jelly beans as our spoils. But development's been a part of what I've always wanted to do, and fortunately for me, it's what I do.
Fantastic. I could just imagine you there with those jelly beans, trading that real estate, Bob.
Still like the black ones. The black ones are worth more than any others.
Lovely. And just tell us a bit about the amazing Koomooloo team. I've had the pleasure of meeting quite a few, but if you could just run us through who's in that team and what your team are doing at Koomooloo.
Certainly. I'm the founder, as you're aware. I have John Warren as a CEO. John is a hospitality man, has owned several pubs himself and run several businesses. He's an accountant by background. He's run hotels of a scale of 5,500 rooms for MGM and Marriott in in the Middle East and Vegas. So he's a hospitality background. I have John Gropley on our advisory panel. John's been a friend of mine and my lawyer for some 35 plus years. Was once the chair for a little while of Automotive Holdings Group. I've been on several public company boards. Very well-versed gentleman in franchising and legal matters and M&A. My immediate team, I've got my assistant and client liaison and helps with the acquisitions is Catherine Andrews. She's a developer in her own right of prestige homes. Her products have been very well received by the market, but she's joined the group now in a full-time capacity. Grant Traub is on our advisory panel. He runs syndication and funds management business, a very competent man. The list goes on quite a bit, Caroline, but I'll probably, at the risk of omitting a couple, it's a competent team. We were tallying up the other day how many years we've had in real estate. It's more than a quarter of a century. So
wow, it's amazing experience and depth in that team.
Yeah, always a different opinion on things, and my role is to cull and sort the best way forward. Yes.
Fabulous. That's amazing. Now, obviously, co-living, everyone I think is familiar with what that stands for right now. But I think, the Koomooloo co-living brand, from everything that I've seen, is absolutely standing on its own with its delivery of excellence. Maybe would you mind sharing a little bit about why, Koomooloo co-living, why the team decided to move forward with this concept in this fund? What's the origin?
Certainly, Caroline. It's the culmination of my life experience and my development experience. I've always been passionate about boats and property. Pretty boring, my dad said, but he was a golfer, and anyhow, that's another story. But boats are relatively small spaces, like floating cubby houses almost, and the co-living concept is for a manor type house with a small, not a small, but a bedroom, a studio that each person can occupy or couples can occupy, which is fully catered for with kitchenette, bathroom, lounge and bedroom. In our case, retracts either into the ceiling or the floor, allowing that usable space during the daytimes. The reason I mention boats is because they're fairly small spaces, they've got innovative cabinetry to make them work a little better than the normal routine cabinetry. So we've commissioned Sam Giovanni, who's Australia's foremost super yacht designer, trained under John Bannenberg, a legend in the industry, to partner with Carn Finch Interiors to come up with the innovations required to make these spaces really sing. So the whole concept of Koomooloo co-living, there's a nautical bent for sure, not that they'll have portholes, they'll have real windows.
Full-size windows, bonus.
But it's almost like living on an urban super yacht.
Yeah, wow.
So we've got staff that will look after the residents, the owners, the tenants, with a more hospitality style of bent, more like a club environment.
Yeah.
So a living building with a sense of community where you can go to bed in your room or stay in your room and study or do whatever you want to on your own. But if you seek company, there's plenty of it. There's always something going on that's organised, communal kitchens and dining rooms. In some of them there's billiard rooms, gymnasiums, communal workstations, designated EAs, etc., etc. We will also have some retail outlets that are our own. We're looking at a 24-hour restaurant, karaoke venue, whiskey bar. Where permitting, there'll be a beautiful roof garden. So it's an economical solution to having a millionaire's lifestyle.
Well, yeah, very attractive, and very much how the new way of living that people are looking at. And it doesn't matter, what age you are. As long as if you think about right now, the older kids that are starting to think about leaving home, the traditional way when we grew up, obviously you'd rent an apartment, then you'd eventually buy your home within probably 5 years' time. That's not achievable anymore to the generations coming through now. So they're always looking for that better life, better value, connected life, and that's what is coming through in the co-living that Koomooloo is developing. And I think maybe walk us through, if I was a co-living resident in one of the Koomooloo versus if I bought an apartment, a 2-bedroom apartment as a standard apartment these days. What's the differences?
Well, the difference is probably when you come home at 11 o'clock at night after a long work day, 12 o'clock in your case, Caroline.
Yeah, right.
There's somebody to greet you, give you your mail, see how your day was, assist in any way possible. It's a club environment. I have on occasion rented apartments, and it's a bit sterile and austere. You get through. It might be a walk up, or it might even have a concierge. But you get to your unit. That's it. You don't go out to see anyone. You don't commune with the other residents generally too much, unless you're an owner, and it's a bit stifled. It's a bit old school. I think what we're learning today with mental health awareness as we have it is people need connection,
Yeah,
and that's what the Koomooloo co-living community will have as a given. And you mentioned also the barrier to entry being higher than it used to be. It is a lot harder for youngsters to get started. And being a smaller floor space, there's a less cost to build, so hence a less cost for entry into this type of investment, for either as a tenant or as an owner. But if people are wishing to be an owner, it has a lot of scope and a lot of upside. And there'll be 3 levels in our community of ownership that people can enjoy.
fantastic. I love it. It's just a full living concept. And I guess, you've done the numbers, the statistics, but why, in your view, is that demand growing so much across New South Wales for what Koomooloo is developing?
Well, net migration in New South Wales is enormous. The demand between approvals and people coming to the state has, for the past 10, 15 years, been far more people coming here than we can get a housing approval, hence the current pressure. The particular specifics about Koomooloo, there's a lot of co-living developers and funds and operators that have identified this as an emerging property segment. But I feel they are targeting what's today's market, which is 3 or 4 star accommodation. What we're looking to provide is, in the old measure, 5 or 6 star accommodation, future-proofing it somewhat. Now, there's disadvantages in that there's a couple more staff and there's more amenity, more floor space to amenity for the guests.
Yeah.
But that will justify a slightly higher rental or income and pay for itself, in my view. But one of the early things I learned when I studied commerce was supply and demand and wants and needs. And wants of a society become needs as we grow. We didn't all need a colour TV. It was a want. I remember getting them. Nobody else would be old enough to remember. But getting a colour TV, that was a hoot. Going back in our parents and our grandparents, the washing machine had ringers and these are all commodities we take for granted today. So
Correct.
with
Yeah.
technology and everything, we're trying to future-proof our product in the building and make for connection, communal living, and really future-proof needs, wants becoming needs.
Yeah, it's fantastic because, often the traditional, I guess, if you are leaving home, getting an apartment, eventually buying an apartment, often you then have a family. So you have to sell the apartment, then
Correct.
you need to go buy a house. So, you lose money most often than not along the way because of stamp duties and things like that. What you're talking about here is, there's flexibility in the investment grows with you. You've got a complete way of life, which is something amazing. One of the things that I wanted to ask you about tonight is your current projects. So I know there is Crow's Nest and Parramatta at the moment, which are probably, I guess, next in your pipeline. You tell us a little bit about Crow's Nest?
Certainly, Crow's Nest. We've got two. Another one that I need to divulge to you, but the first one in Crow's Nest is a very well positioned north facing site, very very close to the metro and close to amenities, the Woolworths and Crow's Nest Hotel, and provides, or just as a convenience, as a lifestyle. It's of a scale which
Great.
will be about 150 dwellings.
Yeah.
We'll have a number of offices and that are shared. You'll be in fact able to take a small office suite if you require. We'll have a
Yep.
club, an upmarket club for our members. We're also looking at a bar and laundry facilities which are provided for. A number of amenities, a beautiful rooftop garden with city views and a rooftop pool. It's going to be like living in a $40 million home.
Yeah.
As far as amenity, the home theatre. You'll be able to have your friends over and watch a movie, a gymnasium. We're also toying with the idea of a tokenised car collection, which will be domiciled. There are some very nice vintage cars. The tax laws in Australia on collectible cars is very favourable,
Yes.
and they're a very rare commodity.
Yeah.
Whether they're not to be used willy-nilly, but to be collected as investments.
Investments. Yeah. Well, it's really everything there under that one project, which is the core of what Koomooloo is doing, from what I've seen. Parramatta, I mean, Parramatta really needs this, but your strategy there is a little different because it's a bigger site. So, what's the strategy in regards to Parramatta, and why was that one chosen?
That was chosen because the site lends itself to a two-tower development, one tower of which we plan to do as co-living, the other we are doing a build-to-sell development on. But we're broadcasting that we will be showing a 10% return to the fund. The asset class itself produces about a 5% yield. So we feel by developing and selling down the residential component, we can consolidate the cost base lower for the co-living that we retain and hence push the yield up. So we're targeting year 3 stabilised income, year 4 a 10% inclusive of depreciation return for the fund. So that's the strategy and the difference with Parramatta, but it will have all the same amenity as that. It's on the river, beautiful location, very close to the new exhibition centre.
Yeah, what I've seen, obviously, from a lot of the projects in the pipeline, you've got certain criteria for where you look to put one of the Koomooloo co-livings.
Yes.
Can you share a little bit about what that criteria is and how you are managing the risks in regards to all the construction risk and things like that for investors?
Oh, certainly. That's 4 questions in one, Caroline.
Yeah, well, keep me on your toes tonight, Bob.
Indeed, indeed. Site selection's an interesting one. first of all, I've got to drive by and see it and feel it and know that it's right. Orientation in Sydney is very important with
Yeah.
winter sun and so forth. Amenity and convenience is really what this sort of living is about. We do have a Koomooloo rural concept which we're working on, and I've looked at many opportunities in our rural communities and a coastal community
Yeah.
program as well. But we're just sticking at this stage to the urban opportunities. Properties capital growth generally diminishes outward from the CBD. In other words, you might get 5% at Hornsby, but you're getting 8% at North Sydney
Yeah.
per annum capital growth. As a general rule, subject to permutations of planning, etc. So we look for capital growth of the asset. We look for rentability, and the primary thing is amenity. And can we build something of the ilk that we'll be proud of as a team in Koomooloo? Because these things stay around for 100+ years.
Of course.
And that's the purchasing criteria. Now, being of my current age, I've forgotten the rest of your questions. Mitigating risk.
Yeah, more about, I guess, the delivery team. How is that? Because everyone always worries about construction risk. It's fantastic to get these great sites. It's amazing to have what you want to put on there. But then you've got that managing that risk with construction.
Certainly, that's a very, very good question, and people should be worried about construction risk because it's a very real thing. And property development is really only about two things, Caroline. It's about leverage and risk mitigation. So, as far as mitigating the risk, Koomooloo will enter into fixed price contracts with the team building the development. But that team is made up of executives that we already were working for our group. So there'd be no hidden, variations, etc. We also have the practice of letting out individual tenders for example, for car park, for structure, for curtain walling, for fit out. Not one builder doing the whole program. And this ensures a number of things, but the safety is if a contractor fails, we can step in to that particular portion. Also, keeps things under control and timing, so we won't have timing overruns. But the main thing from our point of view is the quality that we create, because execution is everything, and we don't want, you're at loggerheads if you're trying to negotiate a price down for a premium product. You can do yourself a disservice sometimes.
Absolutely. Yeah.
But
Fantastic.
we know what things cost to build, and we know how it's done. It's not our first rodeo with 250 years experience.
You look so young, Bob. I thought this was the first time.
Oh, you're a charmer. I'll take that.
You'll take that. So segueing there, investor returns, because obviously that's where people listening are interested in this. It's a new concept for them, investing into co-living funds. We don't have a co-living fund listed on our asset hub until we listed your esteemed fund. Can you give us an explanation of how the co-living fund is going to generate its income and how the returns work to the investors?
Certainly. So it's a fairly high yielding ambition to purport we'll be showing 10% in the stabilised income. That return when an asset class is showing 5%. So the fund will be getting development profits. So in other words, where we're doing the construction and so forth, or we will probably have an asset at the end of the day that shows 7.5%. But then what fills that building is tenants which
Yeah.
will pay a little higher rent than the competition because we're offering more. But the commissionaires, the nightclub, the restaurant, these can be owned by the fund and produce business profits, and that will take us over the 10%. Plus, there's some opportunities to buy a bigger parcel, subdivide off, consolidate
Yeah.
profits down into the cost, which, as competent development group, that's what we'll be doing. So in answer to your question succinctly, we're targeting a 10% income return by year 3 to 4,
Yeah.
plus capital growth.
That's
The
fantastic.
gearing levels will never go beyond 50% if
Yeah.
we have gearing, and then of course investors are at liberty to utilise external gearing should they want to.
Yeah. And Koomooloo, this particular fund, it's perpetual, right? So as you keep accumulating assets, obviously return keeps building. It's something that will keep going, hopefully for a very, very long time for investors.
Indeed, we're trying to future-proof it as much as possible. We're using technology where we can, even in the management, and there's some development in the hospitality management that we have been funding, but I won't elaborate on that so much now. But what we will inevitably be offering is the 3 types of citizenship, if you like, Koomooloo citizens, 3 levels of accommodation. First, get in there. Second is have your place and some income, and the third is financially independent, all in the Koomooloo family.
Yeah.
Enough passive income from what you've invested in. We intend to have a complete, holistic, healthy approach, a management adoption of a management package. Yeah.
And that's really how investments are now starting to be looked at, very much holistically, being part of ecosystems, hands-on, it's that whole package, which the younger generations, I include ourselves in that, of course, Bob, are really looking for now.
Us youngsters.
Youngsters.
You don't have to put yourself in my generation, Caroline.
Now, on that, New South Wales outlook, the outlook for the state, there is no ease in regards to the housing crisis. So I'm assuming long term, there's always going to be an attractive model right now for in the long term future for New South Wales.
Well, I think so. This housing crisis has been brewing for 20 years.
Yeah.
It's no mystery. We've had less approvals than migration for that long.
Yeah.
It's not going to be resolved in a heartbeat. I do believe that our product will cater from 18 to 80, 85-year-olds, from when you leave home to when you need high care or some sort of care environment. So it's the broadest range of the market. I think we're really, I'm very happy where we're headed.
Yeah, you seem to have picked that sweet spot. Now we're going to ask Bob a few more questions, but if you can prepare your questions that you have and pop them in the chat, and our amazing Shara will get them ready for us to answer. Bob, one more at least, vision for the future. So Koomooloo, you've touched on a little bit in regards to its brand and what that brand represents. So we've talked about this particular fund, which is New South Wales centric. Can you give us a bit more about the vision for the future, 10 years ahead, where this Koomooloo will sit, and some of the other great opportunities, I guess, that will come to investors that are part of your ecosystem?
Certainly, Caroline. Yeah, I'd love to. We intend for the Koomooloo offering to capture all your housing and holiday needs. So Koomooloo will own assets, small chalets in the snow. We're looking at Lombok, Bali, and Flores for resort type accommodation, little lodges and so forth. So we'll have a plenitude of satellite developments where, as an owner or a resident, you can go and stay at one of our resorts. We're also looking at purchasing in the future a food bowl, simply cattle station, intense market garden, etc., so that we can provide our own healthy produce to our residents in any circumstance. I'm sure you're going to work out how we do our own currency before too long.
I'm keeping the lid on that one.
But a sustainable, I see us growing into a community that is borderless,
Yeah.
where good people enjoy a good lifestyle and are well supported.
Fantastic. I love it. I love the vision. I think everybody listening is going to love that vision. You're probably going to have a lot more questions coming your way about how they actually become part of that vision. We've got couple of questions coming up, but how many occupants will there be in each complex? I think this might be a bit broad for you to answer, but maybe just give us some indicative on the New South Wales ones, Bob.
Okay, well, I can tell you a couple of facts. Our complex will range from about 50 to 200, 250 accommodation apartments. So at 50, if they were all couples, there would be 100 occupants. Not always all couples. You probably have an equal split of couples and single occupants. So if that answers the question, I think for a 50 apartment development, you'd probably have about 70 residents, 70 to 80.
Okay, and we also had, this one is a much longer question. Can you buy tokens that give you the rights for living there, or is it investment only?
Sorry.
Can you buy tokens
and give
rights for
rights?
living there, or is it investment only?
Certainly we can do that, but that's by buying tokens, there is a direct ownership model that we are working on for release. I'd like to answer that question specifically to that person, but it's not a long-winded answer, but a technical answer. But yes, it's not just investment here.
Yeah, it's just is it based on those levels that you were talking about before, Bob? Over a certain level of investment, you get living rights as well.
But I'm sorry, Caroline, I was reading the next question.
That's okay. We're talking about those levels that you were mentioning before. So over a certain level of investment is when the living rights kick in.
Over a certain level of investment, yes, correct. So people would forego their rental income to live in a specific unit over the value of the unit.
Fantastic. Next question is, I guess, what happens? This is a bit about risk management. What happens if the restaurant nightclub lose money? Where does the money come from I can't read the rest of that question, but I'm assuming that comes down to if, the fund is having a yield issue. Have you got your risk management buckets spread out enough that investor money is still safe, even if some of your hospitality outlets in one complex had a problem?
That will depend. The hospitality outlets will be franchise. So if the business, the fund owns the franchise, then it's up to the fund to run it profitably.
Yeah.
If it's owned by a franchisee, it's up to the franchisee to meet any losses. Mm-hmm. Having said that, we won't. This is true of any business enterprise. Restaurants are seasonal. All businesses are to some degree, depending what they are. But we've got an underlying community to support it and a lower cost base because of that. And yeah, I've answered the question. It will depend on the ultimate ownership of the business.
Yeah. Now, how do your co-living projects help create a sense of community that encourage tenants to stay long term? I think you
Well,
touched a little bit on this before, but maybe
certainly,
you're asking for a little bit more of an insight into that connectivity that you've got there.
yeah, certainly. Our hosts and hostesses of the buildings will be hospitality background, hospitality trained. We'll have in-house in the team. There's psychologists that work with people, not in an invasive way, just to know how they're going, where they're at, where we can be of help. So each resident will, at their discretion, develop a profile which we can therefore offer better service
Yeah.
to them. But I've worked for many years with Club Corporations of America. We brought them into Western Australia 30 years ago when we built a golf club, and the level of service that they do in America is extraordinary, and it's just really edging that way a little bit more,
Yeah.
if that makes sense.
Yeah, it is, isn't it? It's all edging that way. As you were mentioning before, that clinical, if you think of a standard Sydney, couple at the moment that might be living in a standard apartment, they're coming home to a clinical environment. There's no connectivity. They've got a mortgage over their heads. There's very tight budgets for entertainment, that type of thing. So, the Koomooloo brand is removing all of that negative energy and replacing it with all the vibrant things that you're offering there in your community. So, very, very good.
It's really an enormous family that we're creating, Caroline. Yeah.
Yeah, which is fantastic. And I think we have come to the end there, Bob. And I thank you so much for your time tonight. And thank you for
It's been a
stepping
pleasure, Caroline. Lovely to see you again.
at the last
And
minute. And
congratulations to you with what you've achieved with the hub. It's phenomenal.
thank you. Thanks very much. And I'm sure if we have some more questions that come through too, we'll get you connected and we'll send the questions out to Koomooloo to be answered. And again, feel free to go and have a great read of the Koomooloo fund that is available on the Asset Hub. And thanks again for joining us tonight. And we'll see you next time on the Blacktie Lounge. Have an awesome evening, Bob.
Thanks, Caroline. See you
Thank
soon.
you. Bye-bye.
Thank you. Good night.
Good night.